Hello everyone and welcome back to the channel. In today's video, we'll take a deep dive into last week's performance of gold, also known as XAU-USD, and explore what could happen in the upcoming week. We'll analyze gold's technical movements, its fundamental drivers, and the key buy and sell levels that traders should be watching. By the end of this video, you'll have a full understanding of what happened, why it happened, and what to prepare for next. Now, let's begin our journey with Section 1, last week's review. Last week was an eventful period for gold traders worldwide. Gold reached a fresh all-time high around $3,500 per ounce, marking another remarkable milestone in this year's rally. However, after hitting that historic peak, the price entered a technical correction phase, pulling back toward the 3,350 zone. This kind of movement is completely natural in strong markets. When gold reaches record highs, many investors lock in profits, creating temporary downward pressure. Technically speaking, gold tested multiple support zones. The first major short-term support was found near $3,345, while deeper supports appeared around $3,220 and $3,160. During the same time, gold's momentum indicators like the RSI and MACD began to cool off. That cooling signaled that the bullish wave was pausing, at least temporarily. Fundamentally, safe haven demand continued to play a massive role. Geopolitical concerns, inflation expectations, and speculation about central bank policies all added to gold's strength. Yet, as traders began to feel that the rally might be overstretched, the market slowed its climb. In summary, last week gave us two clear messages. Gold remains in a long-term uptrend, but short-term corrections are part of a healthy market cycle. Section 2, Interpretation, what the data suggests. So what can we learn from this pattern? Number 1, the bullish bias is still alive. Every time gold corrected, it quickly found strong buying interest near major support levels. This tells us institutional investors and central banks are still confident in the metal's long-term potential. Number 2, the market needs to breathe. A rally cannot go straight up forever. When the RSI climbs above 70, it often hints at overbought conditions, meaning traders may take profits before the next leg higher. Number 3, resistance levels are firm. The region above 3,500 is now a psychological barrier. Each time gold tries to cross it, sellers appear to defend that zone. Number 4, we may see consolidation. Before a new breakout, prices often move sideways in what's called an accumulation or distribution phase. That's when smart money positions itself for the next big move. And finally, Number 5, the fundamentals remain mixed. While inflation and geopolitical risks keep gold attractive, a stronger U.S. dollar or hawkish central bank tone could temporarily limit upside momentum. Section 3, Key Levels to Watch next week. Now let's move on to the technical roadmap for the coming week. Here are the most important price levels that traders should mark on their charts. Support levels, potential buying zones. The first key support is around $3,300 to $3,350. The second is near $3,227, a medium-term trend level. And the final deep support lies around $3,160. If gold stays above these zones, the broader trend remains bullish. Resistance levels, potential selling or breakout zones. The first resistance sits between 3,550 and 3,600. Above that, we have a target zone near 3,650 to 3,700. A full breakout beyond that range could send gold to new psychological territory, possibly even toward $4,000 per ounce later this year. These levels are not predictions. They're decision points. areas where traders react, either taking profit or adding positions. Always remember, the best traders don't guess the future. They prepare for multiple possibilities. Section 4. Scenarios and trading ideas for next week. Now let's discuss possible scenarios for the week ahead. Scenario A. Bullish continuation. In this setup, gold breaks above 3,550, supported by new economic data or a surge in safe haven demand. If that happens, momentum could accelerate toward 3,650 and potentially higher. In this case, traders might look for buying opportunities above 3,550, placing stop losses below 3,350, and aiming for gradual profit targets near the next resistance zones. Scenario B, bearish pullback or correction. In this alternate scenario, gold fails to break the upper resistance and reverses downward. If price dips below 3,350, short-term traders might expect a deeper correction toward 3,220. That could offer a second chance to buy at lower prices before the long-term uptrend resumes. The key idea here is flexibility. Markets don't move in a straight line. Smart traders prepare for both upside and downside possibilities. Managing risk carefully. Always define your stop loss before you open any position. Because in trading, protection of capital is more important than chasing profits. Section 5. Fundamental factors to monitor technical charts are powerful, but fundamentals tell the why behind price moves. Here are the top fundamental factors that could influence gold next week. Federal Reserve policy. Any signal of potential rate cuts can lift gold, because lower interest rates reduce the opportunity cost of holding non-yielding assets like gold. U.S. dollar strength. The dollar and gold usually move in opposite directions. A strong dollar can pressure gold, while a weaker dollar gives it wings. Inflation data. If inflation data comes in hotter than expected, investors often rush toward gold as a hedge. Geopolitical risks. Political tensions, wars, or global uncertainty increase demand for safe haven assets like gold. Central bank purchases. Several central banks around the world have been adding gold to their reserves. Their continued buying supports the metal's price base. Market sentiment, investor confidence, stock market behavior, and crypto trends can also influence gold indirectly. If you're preparing your trading plan for next week, make sure to keep an eye on these economic headlines and data releases. Sometimes one speech from the Federal Reserve Chair can shift the entire week's momentum. Section 6. What to emphasize in your YouTube video. If you're planning to use this analysis for your own YouTube content, here's how you can present it clearly and professionally. Start your video with a strong hook. For example, gold just hit another record high, but could a correction be around the corner? Let's find out. Then move step by step. Show last week's chart and highlight key movements. Zoom in on the most important resistance and support levels. Explain technical terms in simple words. Your viewers will appreciate clarity. Add visuals such as candlestick charts, gold bars, or market data overlays. Present both bullish and bearish possibilities. End with a summary of your personal view or bias. For example, as long as gold stays above 3,300, I remain bullish in the medium term. Keep your tone educational, not promotional. Viewers trust creators who explain rather than hype. Also, remember to include a short disclaimer, saying that this content is for educational purposes only and not financial advice. Section 7. Caveats and important notes. Now, before we wrap up, let's talk about risk, something that every trader must respect. Gold can be extremely volatile. Even when the long-term direction seems obvious, intraday moves can surprise everyone. Never trade without a plan. Always use a stop loss, Avoid emotional decisions and never risk money you cannot afford to lose. Past performance does not guarantee future results. What worked last month might fail next week, and that's perfectly normal. The secret of successful trading is discipline, patience, and constant learning. If you're making trading-related videos, be transparent with your audience. Tell them that markets are unpredictable and that no one can foresee the future with certainty. End your video on a professional, calm note, such as, "Gold remains one of the most fascinating assets in global markets. Whether it continues higher or pauses for a while, smart traders know that preparation is the key to success." Conclusion. So to summarize, last week, gold reached new record highs before entering a mild correction. The broader trend remains bullish, but the market is showing signs of consolidation. Key supports lie around 3,300 and 3,200, while resistances sit near 3,600 and above. Fundamental drivers such as interest rate policy, inflation, and global risk sentiment will continue to shape gold's direction in the weeks ahead. If you're a trader, be alert, manage your risk, and trade according to your plan, not your emotions. If you're a content creator, use this analysis to educate your viewers, showing both sides of the market. And as always, stay disciplined, stay informed, and stay profitable. Thanks for listening. Don't forget to like, share, and subscribe for more weekly gold trading analysis. See you in the next update.